Crude prices steady this morning. You can see they're 73 after a slide yesterday of 4% on news of a possible ceasefire between Israel and Hezbollah. But markets are still wary of an Israeli retaliation against Iran's missile barrage from last week. Joining us now, Tom Kloza, OPIS Global Head of Energy Analysis. So I guess it's quiet right now, Tom, on that front. But if we go to before the most recent, it's gotten, obviously, it's been upgraded, the possibility of even a wider conflict. But before that, what were the dynamics? You had Russia still selling oil, right? You got Iran still selling oil. You got the U.S. As the largest producer, more than historically than we ever have before. So was it a well-supplied market prior to the worries about the Middle East?
It wasn't particularly well supplied, but it's never well supplied in August. August is the highest demand month of the year for crude oil.
Okay.
It was pointing lower, and I think it's still pointing lower because you have to consider that there's probably about 600 or 700,000 barrels a day of additional crude for export that's going to come out as temperatures moderate in Saudi Arabia and Iraq. You throw that in with the fact that you had a ministerial meeting last week that suggests we will see additional crude on the market from OPEC Plus in December, and you have a market that's pointed to the downside. There's the possibility that you could have a wider conflagration in the Middle East, but it's not a probability. It's a little bit like there's a possibility the Giants and the Jets may win the Super Bowl this year, but I wouldn't be betting on it.
Even with the new coach, I guess. If Israel were to not go after the nuclear sites, but were to just really try to strike a blow against the refineries, would that change the dynamic?
I'm sure that in diplomacy right now, they're having these conversations. And if the Israelis do what they did back in April, when we had a similar analog to this and just hit some military targets that have nothing to do with oil production, I think you'll see the market drop. I mean, I think that oil is destined for much, much lower numbers. And whoever wins the presidency next month is going to have a problem maybe of a little bit of oil deflation. All of the balances for 2025 point to more oil than the world really needs. And if you have OPEC Plus coming back to the market with some of that production that they cut, I think it's a real problem in 2025.
It is weird. $50 oil would be great. We could refill the SPR, but then the industry starts shutting in certain non-profitable fields, I guess, and then we could cause the next price spike. It's hard to be you, Tom, to try to figure out because everything has got a unintended consequence or an opposite effect on what you're watching.
Yeah, it's very dynamic, though, and it's interesting to that extent. But next year is definitely a problematic year. I mean, even the most bullish investment banks think that, we could dip into the 60s or even into the 50s because we will have more oil than we need next year. The other thing is you don't have the big money chasing oil anymore. Earlier this year, I said it was like the oil market's like Aaron Judge. It doesn't chase. And when you're not chasing crude higher, you're not putting a lot of money on that side of the market, and you're not getting that investor premium that was there for most of the last 20 years.
Do you have a Knicks analogy? We did the Jets, Giants, and Yankees. We got Mets, Rangers, and Knicks. Next time you come on, we're inclusive here.
Well, my analogy is that people look at rising gas prices or high gas prices like I look at the Dallas Cowboys. I just can't stand it. There's no particular reason for it, but it has a visceral impact on human emotion.